Thank you all for joining us. We're going to get going officially here. Today, I am super duper excited to get a chance to introduce you, Steve, to everybody on the call. If you've been on our webinars in the past, you might have had me talking at you for an hour straight. Steve's going to be joining me and hopefully taking over some of that talking role. So definitely excited to have you on, man. Let's keep it light, keep it fun. Let's do this. Tell everybody your favorite sports team. Let's start there. That's always a hot topic on
That's an easy one. Yanks for sure, man.
All right.
Lifer for the Yanks for sure.
Unfortunate as of the moment, but definitely
it's been embarrassing.
Yeah, definitely a strong overall pick from one Yankee fan to another. But I'm also a Knicks fan, so I know both sides of the story, at least from the '90s on. Really quick, as we kind of get going, I'm not gonna go crazy on like introductions or things like that. We'll get to that. But the topic, right? Our topic today is commercial finance, and more than just commercial finance, it's the future of commercial financing, right? And when you start to think about the future of anything, I was always taught the past repeats itself. So it's important that you start there and kind of look at those things. So to me, when we started to talk about this webinar, you and I was thinking about technology, process, lenders, resources. We're in the information age, right? Like, yeah. You have all of these lenders with all of these products and all of these resources. How do you make an efficient decision, right? That's really what it comes down to. And, I hope that that's what we get out of today's webinar, man, is, that was kind of my goal leading into this, was hopefully giving you the platform to allow the masses to kind of understand what do we see currently, what are we kind of projecting, but more than projecting, what do we know is going to happen, because it's certainly already been happening, right? And I think that, that's kind of one of the things that you'll hear on today's call too, is, the future is under our noses. It's already here, right? The trends are here. Things are changing. Rates are updating. We're not in the same thing that we were just a couple of years ago. So, as we kind of get going here, just want everybody to be informed on how these things usually go. So we'll be utilizing the Q&A a lot today. I have Christina here as well, as part of our marketing team, who will be probably answering some basic questions for you guys inside of the Q&A, and basically giving you real-time answers. Should we not be having those answers for you as we go throughout today's presentation, but we'll do a quick presentation and then we're going to get into a live Q&A. So I really want to encourage everybody to utilize that Q&A feature. Make sure that you're queuing up those questions, anything that you have in terms of products or scenarios or just general questions. We love to talk, so you'll see that before the end of this thing, that's for sure. And I just want to take a moment to shout out a few key people and people that help make these things possible, right? Number one is our marketing team and tech team for really putting these things together and getting us rocking and rolling. This is our biggest webinar to date. We're already over 100 attendees, just about 110 participants at the moment. And just so you know, this is our biggest one to date. We had over 860 people register. We're just about ready to update that Zoom account to that 5K, because we're going to need it. So, definitely want to thank the marketing teams, the tech teams, all of the sales teams that really provide the ultimate experience that you guys are having in terms of our partners. And then I want to thank Steve. Steve joining me here, getting a chance to chop it up. I know based on our own conversations where this thing is going to go. So I'm excited. You ready to rock?
Oh, certainly ready.
All right. Really quick, guys, I promise we won't make this long, but we will answer some questions as we go. So just definitely make sure you're getting your full worth. Once again, I'm Tony Cimino, the Vice President of Business Development here at ROK, and I'm joined by Steven Rodriguez. He's our Director of Commercial Finance. Steve, just really quick, tell everybody what the main initiative is behind having you here.
Of course. Thank you, Tony. Firstly, thank you for everyone that's joining us. Thank you, Tony, for the introduction and for having me join you for today's session. Very much appreciated. So real quick, the initiative here, the purpose here of what we're doing with the commercial finance division is to add additional products to what ROK has already been able to offer, for business lending throughout its history. And ROK is always, as everybody knows here, I'm sure ROK has really provided a main focus in the short-term working capital space, really since its inception. Missing, of course, as all of us have discussed over the last several months and putting this whole project together, really missing opportunities for the longer term products, the more in-depth products, the more traditional products, which we'll get into throughout today's session. So these products are meant to provide a supplement to what you're already doing.
Yeah, absolutely. And that's a huge point to today is, we've done some of these deals in the past. Like you might have even referred us one of these deals that we paid you commission on. And you're like, hey, wait, I've already done some SBA deals with ROK, or you guys have done some factoring with one of my clients. Like, what's up? Well, what's really up, guys, is the formality behind everything. Steve is building out a team. We're going to really rock that commercial market as well. So if you've utilized us for those short-term working capital solutions, what a seamless process that is. Not that we haven't done some of those other deals from equipment financing to ABL or any of the other products, but the real bread and butter was always that working capital. Well, the idea by Steve and his team joining alongside of us and becoming part of ROK is that now it's everything, right? And we'll really get into that as we go a little bit further into the presentation today, but that's really what it's all about, right? What products and services are there? What are the typical terms? What does it take for my business to qualify? How long is the funding process? What does it look like, right? That's really the main objective today, is understanding pretty much everything front to back. And that's really what we're going to do, is we're going to really paint the board for you guys. So when you think of ROK Commercial, it's not any different than ROK Financial. It's literally side by side, just like the logo here, right? But more than anything, those products are going to complement one another. In fact, the products in the commercial division alone complement one another. And if you've done business with us on the working capital side, you've seen those products complement one another. So that's really what you'll see here is, a lot of these things can be used for a lot of different reasons, right? You can take out cash on a building that you own and go purchase equipment. You don't necessarily need equipment financing, but there might be benefits to the equipment financing program. Right. Or keeping the cash in the building, right? So these are the things that we want to really bring awareness to, knowledge about, and realistically, the same thing that we've always brought: the process, the lenders, the resources, and the ability for you to do volume. We can handle as much of it as you really have. So we're going to dive in here, and this is where Steve's specialty is really going to kind of kick in, and I'm gonna throttle down for a little bit here, but no, the commercial real estate product, right? I think our next slide might even get into some of the different, property types, but just give me a little bit of insight here, because, $500K to $100 million, that's quite a range.
Oh yeah, for sure. So yeah, I mean, this is sort of the backbone of the longer term products, the more traditional products.
Why is that? And just because I'm going to try to keep it simple, right? Why is that the case?
Great question. I mean, commercial real estate lending, commercial mortgage financing has been around several hundred years. Yeah. It's been around for a long time. It's a product that's not going anywhere. It's a very traditional product. The regulations are very light on it in the commercial industry, the commercial sector, comparatively to the residential sector. So yeah, I mean, these are products that have a wide array of structuring types that are available. What I mean by that is we can work with conventional bank level products for commercial real estate financing, through to alternate A products, which are just a step outside bank level, into private and hard money lending. It also incorporates residential investment property financing, such as fix and flips, long-term rentals, short-term rentals, like an Airbnb or Verbo property. So there's just a wide array of different products and different funding types that are available in the commercial real estate vertical. So Specifically within there, as Tony has noted here, options ranging from 500,000 to 100 million. Just a quick note on that. Not that 100 million is a cap. We can certainly go above that. You're not going to see too many opportunities, of course, ranging above that. But if the scenario comes along, just know that we have the outlets for it. We have the relationships set up for that.
And you bring up such a great point, right? Like, just like any of our other webinars, like, these aren't black and white guidelines, guys. They're a guardrail more than anything. It's to keep you, kind of going down the path of what is I don't want to call it an easily fundable deal, because none of these are going to be easily funded, right? Sure. That's part of this, is the process and the knowledge and the document intensiveness, and when to provide what documentation, when to update that stuff, right? And when we start talking about real estate, you're talking appraisals, title. There's a lot that goes into it. So when you have these products, I just want you guys to be aware, it's more about, really identifying the opportunity and then backing the overall scenario into the product that makes the most sense, right? So that's what you'll see, and you'll really kind of start to feel in terms of all of the products that we're going to talk about here today. But Steve even mentioned some of these uses of funds here, and we're certainly including, but not limited to, these these 6 here. But the real overall consensus from what I've gathered so far on the commercial real estate side is it's not one size fits all, which, all lending, right? You're probably laughing at me. All lending is that way. But, just like other lending, people like what they like. And I mean, by people, I mean like banks and lenders. They like what they like. And, they're able to know their niche and really deliver in that niche. And that's where we want to help you guys understand what are those niches and where can we go and essentially bring the right type of deal. And then by having the right type of deal and knowing the lenders and their process, it certainly can become a less difficult process overall for everybody. So that's kind of the idea as we go along here, guys. And then, the commercial real estate side of things, like Steve mentioned, is almost essentially a Swiss Army knife. And what I mean by that is, if you have that availability in some property, we can be creative with what you're able to utilize the funding for. So, we'll continue to dive into some of these things, but we did have a quick success story, and you'll see a theme here, guys. We'll go basically product, a little bit of an overview, and then a quick success story. But Steve, just give a quick, kind of background here, if you don't mind, right? Like,
sure.
What was it about this deal?
Yeah, so this is an interesting one. This is for, I believe, a wholesale property that was in Laredo, Texas, right on the border, the Mexico-Texas border there. This gentleman was looking to buy this property for supply chain purposes. So for shipping purposes, as a warehouse, as a kind of like a midpoint for distributions coming into America from Mexico. And the purchase price, as it's noted there, was listed at, I believe it was originally listed as 3.1, and reduced to 2.9 because the appraisal came in for less than the purchase price. So when that happens, if the seller and the realtors and whoever's selling the property, if they're not interested or open to reducing the price, and let's say the lender is only approved at 25%, a 75% loan to value with a 25% down payment, then that price comes in, or that value comes in, as it's noted here, let's say 2.9 million, 200,000 under the agreed upon purchase price. That borrower, the buyer, is now stuck having to pick up the difference between the 25% down payment on the appraised value to cover that shortage between the appraised value and the purchase price. So what we were able to do, the borrower was short on the cash, didn't have the additional the extra couple $100,000 needed to cover that shortage. Rather than lose the deal, we were able to go back to the realtor, go back to the seller, step in, explain to them the scenario, and negotiate a reduced purchase price, which then allowed the borrower to, or the deal, the nature of the deal itself, to close the gap on that shortage. Without this, the deal wouldn't have funded. It wouldn't have gone to the table. But being that we had understood the inner workings of how to make the deal structure work, and we were able to articulate those details to the seller and the realtor, we were able to get the deal across the line and salvage this one and prevent it from being lost altogether.
You bring up a great point in, like, what you might lose here, right? And I just want to kind of slow it down for a second, right? You take a look at this, you start thinking, man, those are big loan numbers, right? We start thinking about the loan side of things. The loan is actually irrelevant. Right. The loan is irrelevant. I'm just going to circle back. His utilization of the funds were this intricate property purchase that he was going to be able to put into his business, where he was going to have a distribution center in a hub spot where he could now strategically disperse of his products and his inventory, right? So that alone is the real value, right? Now, making that deal happen is the overall thing that has to take place, right? Easily that deal could have been walked away from. There was 200,000 reasons, in case you missed that in there. There was 200,000 reasons that deal might not have worked, right? So, right, yeah. As you start to take a peek at these things and you start to really dissect some of these deals, start to really go into, why are they borrowing the money in the first place? What does this actually do? If we're creating a simpler process for your supply chain, what does that actually realize in the end of your business, right? In terms of dollars, you can always figure the numbers out. Especially on these deals, we're going to do enough research that we're going to be able to follow those numbers. And that's really what you have to understand, is that's what the lenders are going to do. They're going to pick these things apart. They're going to make sure that these deals really dot the I's and cross the T's. But the most important thing is the actual use of funds, because, I'm assuming this deal didn't close in 2 days. Right.
No, this was a 90-day, roughly a 75-day turnaround.
So even quick, right? That's a decently fast deal. Yeah. But, 75, 90 days plus 200K that you would have had to come up with, or this or that. If you weren't able to kind of get around all of that, like, this person loses that opportunity. So it's super important that we keep that in mind as we go through these. It's not necessarily about the loan. I mean, it is, don't get me wrong. It is, right? Like, I sell finance. I shouldn't say that.
It's the vehicle for the borrower to meet his objectives, right? He obviously had a long-term business plan that he was looking to facilitate. The warehouse was a necessary part of that plan. From our end, it's just a matter of understanding the business acumen, having a clear understanding of the business acumen from his perspective and what he's looking to do. And as Tony's noting, if we're not able to wrap up that loan, and we're not able to get all parties to get on the same page and, be comfortable with, from the seller's perspective, cutting the purchase price, and from the buyer's perspective, maybe coming up with a little bit extra cash to make the deal work. That buyer misses the opportunity altogether. The seller now has to relist the property and may not be in an advantageous market.
I was going to say, and we've seen that
right at the decline.
We have seen that, right?
In values, absolutely.
We have seen that, and you'll continue to see that. The rates are subject to change. That's pretty much what the Fed has taught us over the past couple of years.
For sure,
rates are subject to change. And that kind of perfectly segues into kind of this next product, right? SBA, right? SBA are loans that are prime plus type of loans, right? So if you know what prime rate is, you can easily figure out what a 7A or 504 is going to end up at, depending on which type of program you're looking at. The one thing that I always make sure to make abundantly clear, and you, like I said in the past, you might have done some SBA deals with us. You might have even heard me say this in the past if you've been on one of these webinars, is when you do an SBA deal, it's not just the bank that has to approve the deal. The SBA also has to approve the deal. And I've seen that come up in different scenarios. Even working with Steve already, we've seen some deals from some partners, as we've kind of really started to push this thing, where the SBA just wouldn't approve for one reason or another, even though the bank would want to do the deal, right? They couldn't do it with the SBA guarantee. And without that guarantee, the bank wasn't doing the deal. So, it's really, really, important that you understand, like SBA loans, you can really do them with anyone. What makes us different is we're a broker, right? So we have multiple solutions. We have a few different spots in the waterfall, where we can do a fast track deal up to 100K, or one of the SBA expresses up to 500, right? There's a few different areas there. So a little bit of background on SBA. What do you think?
The most important thing that I would just, jump out and say about SBA loans is that there's a really wide range of use of proceeds. We're talking about business acquisition, working capital, debt consolidation, commercial real estate acquisition, equipment financing, inventory purchasing, and then almost like a leveraged debt product where you can single out each one of those uses individually or wrap them all together into one loan. For example, what I mean by that is we can provide, working capital financing with equipment financing with inventory use of proceeds all in the same 7A loan. Yeah. There's a difference, of course, if anyone's familiar with SBA loans, there's a difference, of course, between the 7A and 504 product. The 504 product is a little more complex. Longer turn time, less available uses of proceeds, really going to be more towards commercial real estate acquisition with improvements or renovations, including construction, or long-term heavy equipment financing. So, I'm talking like capital equipment, $1 million and up type of stuff. With that kind of product for equipment financing, they can go, 15, 20, depending on the purchase price, even up to 25 years on the term, which is completely unusual for an equipment product.
Absolutely. And that's the advantage, right, to an SBA type of deal is the rates are prime plus, and the term is so long, the payments are going to be super affordable, right? And the one thing to keep in mind is there are some, per guarantor, regulations for the SBA where, hey, on certain loans, you can only have up to a $5 million exposure. So if you have somebody that owns multiple businesses and they have an SBA loan out on one, they may not be able to go get an SBA loan on another. So there are some things that will qualify/disqualify somebody for an SBA loan. The one thing about the SBA is, unlike some of these other products, the SBA is very black and white. So if you don't meet one of these requirements, you're not going to get an SBA deal. And that's what makes us so unique, right? Is, that client that is right outside of it or is potentially eligible 6 months from now, right? Is there a bridge type of product we can put them in? Is there something that, hey, now if we did X, it can actually be wrapped up as part of a leveraged debt style deal like Steve was talking about, right? So there's a lot of different nuances to an SBA deal. The main factors are kind of those things that we touched on. And then just a quick success story, right? Like Steve was talking about, SBAs can have a ton of different utilization of funds. I've seen people buy out partners or, a child buy a business from their parents, right? Like you see here, debt consolidation and inventory, for a manufacturing company. I actually remember this deal. This was the company, I forget exactly what they manufactured, but they were using it to purchase a ton of metal, like a lot of it. It was quite the purchase. So that's this type of deal, right? Where you have a unique opportunity in the business where you need access to more cash than your business can probably leverage based on its cash, right? And what I mean by that is, we specialize in that unsecured world, right? Like, you have somebody that gets approved for 50 to 100 grand in a working capital style deal. You're talking about somebody that's probably getting 500K to $1 million in an SBA style deal. So that's where you can start to see these deals take shape is, where are we going? What's the path of least resistance? What makes the most sense? Well, dollars always make the most sense, right? Like what takes the least amount of put forward to get access to funding that makes the most sense, right? So any highlights on this deal? I know.
Yeah, I mean, this is interesting because one note that I want to touch on here, the debt that this business was looking to consolidate was primarily MCA debt. And so that's an interesting component here. And one of the things that we're really going to be able to capitalize here in this relationship between the more traditional products and, of course, the short-term working capital products that has been more the primary focus for ROK over the last several years, or since its inception. You'll have opportunities to offer those working capital products as a bridge to the more traditional products like an SBA loan. In this case, that's not the way they did it. They had these other debts that they had accumulated other advances that they had accumulated over the last 6 to 8 months or so, maybe even a little bit less than that. But those liabilities were consuming their cash flow. They served their purpose. The business owner's objective was to free up that cash flow and consolidate that debt into a loan that would be on more like a 10-year term monthly payment schedule at a much cheaper rate. So in doing so, this freed up, I believe it was well over $40,000-$50,000 a month in cash flow that they were expending towards those other debts.
Yeah, no, that's a big utilization of funds, right? Like if you're able to stretch that term out and really save in that cash flow, SBA loves that. Yeah. they love that. It's one of the things that really will start to put your deal together for you almost. For lack of a better term. I just want to shout you guys out really quick. We have over 50 questions in the Q&A already, and I've seen Christina answer. She's already answered 10. So shout out to you guys. We'll definitely make sure that we get to these questions here. A few more slides, I promise. So hang on tight. So equipment financing, right? This is one that, I would assume a few of you have done some deals with us, right? I think back to just a couple of years ago, we did a good amount of equipment financing deals, with one lender in particular. And, that's kind of been the case, up until this point without really doing it on purpose. We've become a little bit of an equipment shop, and this is kind of the dabble into commercial finance first for us. We've been doing this one for, I don't know, 5 to 7, now probably even more than that, probably close to like 10 years. We've been doing equipment, but no real official team behind it, no real official process behind it. Next month, not to go too far ahead here, but next month, Steve and potentially, and certainly Ryan from Steve's team, we're going to be doing a deep dive into equipment financing. And keep an eye out. We'll have a few more of these deep dives into these different products in the coming months here. But next month, we're going to start out with equipment financing. The few things that I want you guys to take away from this are the fact that we will do any piece of equipment, right? Like as long as it's, as long as it's, you can use the equipment, right? All functioning equipment. Now,
working condition.
Yeah. No, what I mean by that is if you are a business, right, and you are building out your office, right? Your office space. You may be thinking of the chairs that you have in your waiting room, like, or computers at the desks, right? Like sometimes you may think like, there's not really financing available for those things. Well, that's incorrect. You can certainly finance those things, as well as a lot of the build out, right? Like, so there's going to be a lot of different pieces of equipment, whether you're in the medical industry, the construction industry, commercial cleaning. I have seen skid steers and forklifts and, like for manufacturer, right? If you're a manufacturer and you're moving things around your warehouse, you need the machinery to be able to do that. If you are somebody that is, countless pieces of equipment. We've done like mulching machines. Yeah. We've done, you name it. Not to go crazy off the rails, but we've done cannabis equipment, right? Like there is so much when it comes to the equipment space. This is like kind of like commercial real estate, like Steve was saying before, one that's been around forever. There's always been people that kind of owned the equipment and then would either lease it to you or rent it to you. I actually know of a fun fact that there were shipping charters in Europe in the 14 and 1500s where you could literally lease a crew, a captain, a boat, and they would just take you out and go do whatever your thing that you had to do. You were going to find the gold or go to find the new world. Like they were down, like, but that was like essentially equipment financing, right? Like they were leasing that boat and leasing the team, right? Like that's where this whole thing comes from. Is it's the mindset behind how business is done realistically. it's very tough for a business to organically never borrow money and never utilize funding at all. Like it's super duper tough. I'm not saying people don't do it. They're usually podcasters though, where, they got a desk and a camera,
So a couple of quick notes here. The one thing I would say with equipment financing, certainly up to that 250, at that 250 range. This is going to be the most similar product to the short-term working capital product that you're already familiar with, or most of you have primarily worked with. And when I say that, I mean in terms of several areas: time to close, documentation is very light, commission, back-end commission is very similar to the working capital product, short-term working capital product. But yeah, I mean, and when I say documentation, non-titled equipment, up to 250,000, as you see here, literally an app only, app invoice, an application, an invoice, and they base it off the borrower's credit report, comparable trades showing on credit. That's really what they're looking at. I mean, they're not really looking at too much else.
Yeah, they might grab some bank statements. That's usually it, guys. Like, it's super duper easy. Like, typical closings on these are 3 to 5 days, like it says here. And like Steve mentioned, our typical close time is, 3 to 5 business days. So, you're right in line. The most advantageous thing to it is the fact that, like, there's so many different options, right? We can do cash out refis on existing equipment. Yep. We can do lines of credit where you can, if you have somebody that's, purchasing a fleet over an extended period of time, right? They need 5 trucks now, but 5 more trucks in 6 months, 5 more trucks 6 months after that. They have 40 trucks already, right? We can look to do something like that. There's so many different options available. I don't want to say that, like, there's lenders that will basically make a product for your clients, because that's not necessarily the case. There's just way more than we could fit on a slide. That's really what it comes down to. Yeah. Like, I've seen some questions about, like, flyers and handouts and stuff like that. And trust me, just like every other product that we have, there will be way too much marketing in all of your inboxes about all of this. But that stuff doesn't really mean anything. It's really, like I had kind of started out this conversation with saying, it's about that opportunity. What are we actually doing, right? The deals take shape themselves based on qualifications, based on industry, based on where they are, based on, realistically, million different factors.
Yeah, absolutely. Yeah, I mean, but another one other note I just want to touch on there that Tony brought up, lease lines of credit. I mean, up above 250,000, typically we're looking at full pack financials as a requirement to obtain an approval and for our lenders to complete underwriting. We're working on a $10 million lease line of credit request right now, a conventional product. Really, with that partner. Yeah, exactly. And by the way, we've seen, on that note, we've seen several requests already within this first month of kickoff of this division. We've seen several requests already for larger lease lines of credit, upwards of $1 million. That's more of a conventional product. It's more bank level or alternate A. You'll hear me say that often. That great product, basically what it allows to do, it's just like a line of credit, a closed-end line of credit, where the borrower, as they have a need for an acquisition, they submit that invoice to the lender. Once the line is established, all they do is submit that invoice to the lender reviews it, they cut a check to the equipment vendor, and our borrower is now able to go pick up their equipment.
Now, Steve, real quick on that, the way that works, does that work like 2 loans side by side, right? And I'm totally just asking because I've seen it in the past where, like, hey, I took a loan today for X amount of trucks, right? And then 6 months from now, I come back and I draw on my line again. Yep. Does that work as like a different underwrite where, like, hey, now we have a new note starting here? Yeah. Or does it compile everything together?
Yeah, right. So it's all under the same account, but each successive lease, each invoice that has its own draw, has its own payment schedule within the terms of the lease line. So in other words, let's say the lease line allows for a 5-year term and they purchase equipment on day one off of that line for, let's say, $1 million. That $1 million equipment will have its own 5-year term at whatever the rate pricing works out to be. 6 months later, they make another purchase for another $500,000.
Right there.
Right. That new $500,000 is not 4.5 months on the term, 4.5 years on the term, but its own 5-year term.
Exactly. So I just thought it was important that we really kind of outline that for you guys, because it's super unique, right? Like if you're somebody, technically it could be the last day, right? Like if you get that lease approved, you're all good, right? Quick little success story here for you guys, nothing too crazy. Again, the real thing that I want you guys to take away here is the type of product, that fair market value lease, right? So it really works as, hey, we're going to take a look at what does this thing typically go for, right? Like, and that's where it really comes into to kind of play, right? Give me a little bit of backstory on this. I know there was something with the vendor, right?
Right. Yeah. So all right. So on this one, this is for a car wash, a company that makes car wash parts. So they manufacture high-end parts and machinery for car washes. Global company, massive company. They work with lasers all the time. Apparently, there's all kinds of laser cutting machinery that's available. That they use that for machining and cutting precision holes into their equipment for their manufacturing purposes. The purchase price on this was $1.6 million. You see here it's 100%. What does it say? 100%. Yeah, 100% financing of the product cost. They had bank offers from several bank offers at 80%, 85% of the purchase price. They were looking to retain their capital so that they could roll into other projects. And we came in with a $1.6 million offer, 100% financing. And that rate, this was when pricing was just starting to peak out a little bit. We were able to really be competitive on the rate. We came in at about a point under prime on this product, which was amazing. That stole it at 100% financing, stole it entirely. Nobody else had a chance.
That's what we like to hear. So I see we got a lot of questions, guys. We're pretty much getting there with the presentation. Just a couple more slides. We have ABL, right? Asset-based loans. The one thing that I wanted to point out here and keep it super short and sweet is pretty much all different types of ABL are available, from inventory and PO financing to AR lines and factoring, pretty much everything in between. It's really going to be only for B2B businesses, right? These B2B businesses that are billing other businesses. If they're in that type of role, they typically have access to these types of products. And these products range from about $250K to 10 million, right? So it really does service a wide range of debt. What's unique about it is the where the debt is housed for the business. And what I mean by that is basically they're going to take over the asset. They're going to put a lien on the asset that they're essentially lending off of, right? Whether that's factoring or AR, and they're utilizing the AR, or it's inventory finance and they're utilizing the inventory, right? They're going to put a lien onto that asset. But that's what's unique about these products is you can still have equipment financing going on. You can still have these other types of products going on. So this is a really great product. I love these types of deals because they were always work in that line fashion where somebody could get access to continual funds, and those are always most advantageous for a business. Well, typically.
Yeah, I mean, if you're thinking about just accounts receivable, right? Accounts receivables they're generated on a monthly basis. So the great thing about this, as Tony noted, is that they're really structured as revolving products where the borrower, let's say, has 100,000. Just to make up an example, 100,000 in receivables this month. And our lender will advance them 80,000 before those receivables start to be paid. They'll give them 80% of that as an advance. Next month, or let's say 2 months down the line, all those invoices are paid. And now there's a new batch of invoices that are coming in, or let's say some of those invoices are being paid. Some of the first round of invoices are being paid, but there's new ones coming in. And now we have that invoice amount has doubled within this round, right? So now they're up to 200,000. Again, upon review of the customers, upon review of the quality of the invoices, our lender will again advance 80% of that total invoice value. So now previously they were at 80,000 on 100,000 in total value of invoices in their first round of funding. Now they have $200,000 in invoices available that can be funded. They'll get 80% of that at 160,000. Yep. So as they grow, that line is going to grow with them.
What's super cool about these deals, guys, and I've seen this time and time again, is businesses will literally build their business around this. If they know what their cost is, right? Because there's that initial, rate that you have, but then, once your invoices pay, you might get a little bit back. So it really depends on the deal. But I've seen businesses mark their product up to make the essentially whoever's purchasing it, their customers pay for the financing, right? So if you mark your product up and now your product's just marked up the extra 5 or 10 or 15 or even 20%, some of these products, a 20% add-on really isn't all that much with the value of the product. If you add that on, now you're essentially paying for your own financing in the cost of your product or service, right? So that is a major advantageous way to run your business, essentially. If you know that, hey, I could utilize consistent capital to scale, right? Because that's what happens with invoices is some businesses might pay you on time, but others might not, right? And that's where, knowing that, hey, if I can get cash today, not going to go too deep into the time value of money here, but $1 today is worth more than $1 tomorrow because of interest, right? So as a business owner, one of my favorite questions I always hear it asked is, how dangerous could you be with an extra 100K in your pocket or an extra 250,000 or an extra $10 million, right? Business owners, they usually can be pretty dangerous, right? Even if you're talking 20, 30%, like that's nothing to them. They'll go turn it into an 800% growth and your 20 and 30% is perfectly fine. Right, so really, again, just circling back to what I said at the beginning, it's really the use of the funds. It's really the use of the funds. Again, use of the funds here, a customer who had recently secured a government contract. Steve and I were actually chatting about this one a little earlier. They were like right on the border of Washington and California and were able to secure a contract with the bordering state. So that's where their growth was going to happen, right? So they needed access to money to increase the staffing, increase their own recruiting to bring in the people. It was not necessarily doubling their business, but it was a substantial change. I think it was like 20, 30% they were going to be adding, to the bottom line. So
yeah, and I mean, just, not just relevant to a medical staffing business, but really any business that comes into these situations where they take on a contract, everybody's excited to take on these contracts, right? But sometimes it's tough to deliver,
scale,
right?
Yeah,
sometimes
you gotta be able to grow.
Yeah, sometimes there's upfront costs that have to be covered to get that project or deliver that service or whatever it is, to get the inventory, to deliver the product, whatever it is. And they're not going to be paid on that service or product for some time. This covers the shortage. This closes the gap so that the business can feel comfortable and confident in taking on those new contracts with the assurance that they're going to have the funds needed and they'll have them available, ready for use, ready for deployment as they need to ramp up to cover those services and products that they've been contracted for.
So that brings us to the point of where it all comes together, right? What you need to know is that we will do it all, right? I've seen some questions about, does the process change? Do I need to provide more documentation for my borrowers? Absolutely not. Nothing changes for you. The only thing that changes is the additional support and the additional products that you may see your customers getting. That's really the only change. You may see them qualifying for a loan that maybe you didn't see in the past, right? Or maybe you did, right? Maybe it's equipment financing. Maybe it's a deal we were doing in the past. That's the point, guys, is there's been formality added behind it. There's a more than enough process behind it, that's for sure. But no, really, nothing changes for you. You can refer over as little as a name and a number of somebody who has the intent to borrow money, and we'll take it from open to close. We'll ask them all the right questions. We'll connect. We'll make sure that they're their need is what is actually serviced, right? It doesn't really matter the product to us. What it really comes down to is, hey, were we able to service the need and really put the business into a good place, right? Because time and time again, I see people who may scratch an itch, for lack of a better term, but it comes at a cost, right? And where they really didn't do the most beneficial thing for their business. Sure. And that's probably because they were working with somebody who wasn't very honest with them, who wasn't very transparent, who probably didn't have the lenders, the reputation, the knowledge, like you said, the competency to put the deal together. But really, more than anything, just do what's right. Yeah. And if you've been around, you know that that's what we do. James, who's our founder, is the chairman of the SBFA's Broker Council. I mean, we've time and time again have sat on industry boards and been a part of regulation talks. And, we know what's coming in this industry. It's why we made this move. And you're going to benefit, right? All those products that you've seen us utilize in the past, from term loans to lines of credit to small business loans, they just got big brothers. That's what happened, right? When you start talking about what's really the difference, well, the difference is, now you can add an asset to those types of products and get access to more money or get access to better terms or a better rate. That's what really is kind of advantageous here. But you'll still see that these are pretty much what the products are going to look like. They're going to look like term loans. They're going to look like lines of credit. I always teach any new reps that come work for us. They always get so overwhelmed by all the different lenders and all the different products and all the different services. And I'm just like, the only difference between every one of these is the contract, the verbiage in the contract. That's the only difference. There's still going to be underwriters. There's still going to be products and process and documents, and we're going to need to see those things and check the boxes, right? But all of that stuff is going to remain the same. And that's the biggest key that I want you guys to take away from this is, hey, we just got the ability to offer more products to our customers and keep the same exact process, right? Where ROK will handle everything open to close, and I'll have access to all the information that I need to really be able to do this. Now, you may be saying to yourself, hey, I'm new here. I've never been on a ROK webinar. Well, shout out to you if you've never been on one. I appreciate you hanging out and rocking out with us. But you may be saying, how do I refer clients? We keep it super simple. Like it says, name, number, we can do the rest. You don't even have to provide any of that. You could technically use a link and share that link with your customers, and they can provide their information. It's really up to you. We will take the time to educate on products and services. And don't take my word for it. Go do your own research. Check Trustpilot, check Google, go check some other companies' Trustpilots and Googles while you're at it. And you'll see other people who refer their business and other business owners that are utilizing this exact process to grow their business, to really take advantage of what we have available. I always get this question, so I wanted to throw a quick slide in about it, of where do I find clients for ROK? The biggest place that I'll always lean to is word of mouth. A lot of our deals come from you guys who get it from a banker or a consultant or somebody's CPA that you know. We do a lot of social media marketing. We use landing pages. We give you access to social media content. You get access to landing pages. All of this stuff is customized for you. It really is an easy process for you to be able to refer potential customers. And then really what really is the whole referral program about? Well, number one, it's the backbone of our business. And I think you should really understand that for a second, because we ran a brokerage for over 15 years now, and it's not always been this way. It wasn't always a situation where we had 10,000 plus individuals who refer us business. Yeah. It was always, hey, we were paying to play. We were spending money to make money in terms of marketing. We've completely flipped that on its head. 100% of our business comes through partnerships. So we have dove headfirst into support, into technology, and into people and training people to work with you. the best piece of advice that I could give you is act like you're the CEO of ROK. And whatever your referral partnership you want it to look like, that's what we will deliver on. Because if you give us that, we can give that back to you. And that's pretty much it, guys. The one last thing that I'm going to ask is that everybody follows ROK on social media. This is the easiest way to keep up with updates. You would have known that Steve and I were doing this webinar weeks ago. No, I'm just kidding. But you can keep up with all of our updates. Sometimes it gets updated faster than the website. That's because this is where social media, it allows us to share information quickly. You'll see videos, business tips, marketing tips, where we find customers, and you'll catch our next webinar. So make sure that that you're following ROK. I believe we're getting to the back of this thing. So one last quick announcement, and I will promise we will rip through some of these Q&A here. If you are looking to get your questions answered live right now, you don't have to wait for me. I don't have to try to pick through one of the 60 plus questions. You can call us right now. You can send us an email. You can send Steve and I an email. It was on one of the first couple slides. So if you took your screenshots, you would have got it. Otherwise, you'll have it in the presentation just after this. Or you can head over to rock.biz. You could come to the office in Great River. Of course you can, but I just mean, it's really important that you know that we are here. We're ready to rock. You should have heard the any given Sunday style speech I gave to the sales teams this morning, waiting for this moment where you all start dialing in. So I'm going to hang up now. No, I'm just kidding. We're going to get to the Q&A. But if you have questions and you're like, hey, I don't really want to wait around, whatever, feel free to reach out to the team now. I'll stop sharing the screen. We'll pop open this Q&A. And as we say, get it rocking. And not to use this to close the show, but to use this to close the show. It really, really is going to come down to that use of funds, guys. How they're going to utilize that funding will back us into the product. You just watched us do it 5 or 6 times on some of these questions and stuff. Again, thank you guys all for rocking out with us. We're well over how long we're supposed to be here. Still well over 100 people. Thank you again to everybody who helped set this thing up. And as we always say, until next time, keep rocking, everybody. Thanks, guys.
Thank you all.